Financials are rallying today after the president announced he would renominate Fed Chair Jerome Powell for a second term. For more on what this means for the banks, let's bring in Wells Fargo senior banking analyst Mike Mayo, who joins us on the phone. Mike, it's always good to have you. Good afternoon.
Thanks for having me.
I think in a word, your general take is that if you normalize rates, you can normalize earnings, and that's why the renomination is important.
The stock market's voting today for continuity. The interest rate market is saying there'll be higher rates. So for banks, what that means is normalized interest rates should be more normalized earnings. And as a reminder, Carl, banks are sitting on record cash. Almost 1/5 of bank assets are in cash, and they have the potential to deploy that cash into higher yielding securities and loans, so with a greater chance of a hike in the federal funds rate. You're seeing the short end of the curve steepen some. That should help reverse what's been a historic 2-year decline in the bank net interest margin, an incredible headwind, which we think will now turn the other way.
Yeah. You make the added point, Mike, that although rates are the battle, in your words, it's technology that is the war. Digitization, automation, AI, IT. Does that mean that the classic ladder of favorites in an environment like this is different than in years past?
Well, you've said my words exactly. Everyone's always focused on what's going to happen in interest rates, this month, this quarter, this year. And it is very important for traditional banking revenues. And the renomination of Fed Chair Powell seems to be, a continuation of, additional higher increases. You've seen that in the dot plots. But what you see here is the intersection of the cyclical change with the structural. And banks have been retooling their architectures, their tech architectures, for a decade. And you don't truly see that benefit until revenues come back with the aid of higher interest rates. So we held a conference last week where we had big tech and all sorts of technologists and bank investors. And what we saw, in one word, love. There is love between big banks and big tech. Tech enables banking to achieve record efficiency, and banks, they're embracing big tech because they need that record efficiency. You're exactly right, though. Whether it's AI, it's revolutionary. We had Gary Cohn at our conference. Gary Cohn, head of the NEC, president of Goldman Sachs for a decade. He said it's revolutionary for banks. There's no reason they can't get to record efficiency. Big data. The biggest banks not only can scale vertically, but they can scale horizontally across products. The cloud, you can save 1/3 on expenses. Digital banking leads to, we think, 1/4 reduction in branches. Electronic payments, Zelle is bigger than Venmo and Square Cash App combined. You have faster processing that can save 1/3 in the back office. And then there's the governance around it all. Technology is among the biggest priorities for banks. It's a bigger priority for banks than I've seen in my 3 decades.